Guys, we're back. We're about to start with our journey. So, guys, as I was saying now, I'm not gonna be waiting for people to come and join. Time is leaving us. So let's focus, guys. Please make sure that you try to put more attention on these things because it's very important and rare to find it. So now I'm gonna share you the platform. So please try to mute your mic that side, guys, because your background voices will be disturbing me this side. So okay, let's start, guys. This is not a long session. I don't love mixing things here. I'll just make things short and straightforward. So since we're talking about spikes, we'll be specializing on crashes. So let's check our crashes now and get started. So the thing that I'll let you know, guys, is that this is Deriv. You know Deriv, how hard it is if you don't have talking about or trying to share some knowledge on crash 500. So let's focus on crash 500 because it's the one that I managed to see some nice movement there. So okay, guys, the first thing that we have to do when you want to trade spikes, check the daily time frame or check the daily chart. If you check this is our daily chart, this is crash 500. Nah? So the thing that you have to check on your daily chart, guys, I will repeat this. Please make sure that you understand. The thing that you have to check in the daily chart is the current movement of the market. Like you have to check which move like the market is currently heading to. In such a way, this is what we have to check. Let me highlight it. This is what we are looking for here. This is our current move in the market. You see, this move, if we check, guys, it's showing us a nice down run. Let me just highlight it to be in a clear color. So if we check this highlighted move, guys, this is our round move, down run move. The market is running down, like it's heading down. If you can be able to see, our market is running down. Yeah? So this is the important thing that we have to check in the market before starting to go to a lower time frame in a daily chart. So in a daily chart, we check, the first thing we check the down run. So we know that this is a down run. We don't look for buying opportunities, even though every time, please note, guys, crashes we sell, we never buy. Even if you say a nice buy setup, we never buy crash. We sell to minimize losses in our trades. We always sell crashes. So always sell our crashes. As you see now, this is our down run. It's heading down. It's a downtrend. If you can be able to identify this move. So if you, in case you find the market doing something like this and an upward move, you don't have to be looking to trade in such a way. So this is our down move. So if we can be able to check a crash maybe 1K, this is in an up move. You see, so we're not like we don't have any trading opportunity in this condition. So focus on the down run. So once you see a daily chart giving you a down run, and then it's where you're gonna be starting to look for selling opportunities. So this is how we start. If you check, guys, we know that this is in a down run, and then we have to identify a level where the market will find a sensitive level so that it can be able to sell. Every time we look to sell crashes. So if we identify this level here, let me insert a zone so that it can be clear. We identify a flip zone. A flip zone is a zone where the market will retest oppositely from the previous level. So if we check here, we had a previous swing low, then it's retested in the opposite direction. You see? So this is where we identify a flip zone. This zone, we call it a flip zone. If we check here, market prices managed to give us a buy retest or an opposite retest, and then now it came and it gave us our opposite retest, which is a nice entry. So the moment you see the market running in a buy and crashes in a daily chart, you have to identify this flip zone, and then you identify this flip zone, and then you will be lucky most of the time because it will retest on the flip zone. So this is what we analyzed in a daily chart. We don't use many things, guys. We don't use a lot of things, no indicators, clean charts. Then now going back to an hourly chart, Now we want to be able to find entries and study the market price, what we call studying or reading the price. So you see how I find an entry, like this is how we start. Before we start in the daily chart, we identify a flip zone, and then now we're switching to a 1 hour chart. We want to check how the market prices is I can say maybe it's delivering itself towards the market. So if we check our order flow, what do we call order flow? Order flow is just the study of the market prices and also the study of market orders. So when we check our order flow here, we are having a consolidation. What we call a consolidation, you can be able to see. So this consolidation is giving us something in mind, like it's a signal to us. So remember, you have to also be able, as you know, Mina, I'm a bank trader, guys. So we study also how the banks or big banks or the market movers manage to trade in the market. Remember here, it's a game of two people, retail traders and small traders, and also the big banks or the market movers, which are also the brokers. In Deriv, those are the market movers only. There's no big banks where like they can manipulate the prices on maybe having news and stuff. So if we check, it's just a game of two, us small traders and the market movers. So now I'm switching as I was in the hourly chart. You see the market is consolidating. Then now I'm seeing this consolidation, and then I switch to a 15 minutes time frame. It's where we're gonna start the real journey. So guys, here I will be able to, if you check how the prices is moving here, like if this market was serious about going up, it will have came and do something like this, or let's go back to 1 hour. It will came and do something like this. Let me just draw. It will came and do something like this and continue going up. You see, if the market was serious with its buy trend, it should have continued going up. Simple like that. So this is a signal. Check the market prices, they come and then they react on a certain level, and then they drop, then they consolidate. Then what's next? What are you expecting? The market prices to go up or down? Obvious, the market prices will have to go down, because if we check our order flow, the market prices are consolidating to show that there's not enough buy liquidity. There is no one who's buying crash, or the market movers are no longer placing their buy trades in crash. So meaning with now, it's a nice sell opportunities from this consolidation. It's accumulating liquidity, guys. Please note that. Then we'll go back to our 15 minutes time frame. So what is it that is giving us a signal or a closure for the market to go in a bearish side? The thing is like this. You check first thing there. First thing there, we have an order block. This is an order block. We have an order block. An order block, this is a down, like you can see, it's a bearish liquidity void, or just because these are spikes. And this is a bearish liquidity, a bearish order block. By then, if you check this way, if we extend this level, it can be extended to infinity, this level. This is a 15 minutes time frame, or this is a 15 minutes chart. If you check, prices are failing to break above this level. Why are they failing to break? Or what is it that is making the prices to fail, to fail breaking above the level? If this market or this crash was serious about buying, it will break above the level. Fortunately, it's no longer breaking above the level. Why do you think it's happening there? So this is what we study the price. Okay, we know how the big banks trade. Then this is how they do it. They place their sell orders. Then they came and placed another sell orders, activating the order block. An order block is a strategy used by the banks or the market movers. And then if you check 1, 2, 3, they are busy splitting their orders. Then what do you think next? What's going to happen? Then this is a nice a signal to show that the market is no longer serious about buying. If it was buying, it will break above this level long time ago. And then we came and have another level, which is here. We call this level bank's liquidity level. What's happening in this level is that market prices, we know that they are failing to break above the level, and then we can now, when we want to sell, we can sell. Like our first initial entry that is strong is to sell inside this gray zone. No matter what time frame is it, but then you have to sell inside this gray zone. So now, unfortunately, prices are trading off from these two levels. You see, so this is the bank's liquidity level. What do I mean about bank's liquidity level? There is a lot of liquidity above this level. There are many people who are selling crashes, and then obviously once you sell around this level, and then you will set your stop loss above this blue level that I've identified. So meanwhile here, there is a lot of money. There is a lot of money because people are setting many buy sell stops there. And then now check the prices, how is it going? It's crashing down, and then we missed this crash because I was explaining. I wanted to show you how to catch the spikes. And then now we're still on the 15 minutes time frame. We are studying prices. We are studying the price. So guys, as you know, we don't So in here, we don't have to identify levels of support. No resistance here. We'll go professional. Bank's liquidity level is a flip zone from a daily time frame. So if we check now, let me show you something. What I refer to an order flow. Check this. There is this, guys. I've checked VIP. Everything that's happening there, it's here. It's from here. This is what I call order flow in full. Like I try to explain anything. So now we have to understand how banks trade. I've explained here, and now we are starting the application process on order flow. And then we don't need this one. 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 We can need something like this. Let me show you guys. I want to show you something that is not working. We also have rejection blocks. So we are going to be using something like this. Where is it? Where's my setup? Where's my setup? This is what is happening. You see, if we check, we can identify that structure, that this one it's a bit upside down because I showed this in the bullish side. So in the bearish side, this is what is happening on our crash 515 minutes time frame. So we have this, what we call a sell side liquidity. But then when we go that side, we call that one a buy side liquidity in the condition. So this is our buy side liquidity. In such a way, we are having many people who are like who like buying crashes, and then they place many buy stops here. So this is our buy side liquidity. Then the market doesn't mean good. When it breaks above this level, it will just go in the bullish side. So this is the thing that will happen. If you want to kill crash, you can wait for crash to come here and then you sell. And then what we call manipulation, it will be something like this. It will go refill our 50 our daily time frame, a flip zone, and then from there it will go down. This is how crash works. So by the time it breaks above this level, it's simply activating or grabbing liquidity for those who set stop losses here and also buy stocks. So this is the main time frame. This is a nice time frame, 15 minutes chart to catch spikes. So now if we check, we're still going to have a long run in crash 500. Crash 500 is still going to go for some time. It doesn't mean if you see this run, it's gonna buy. This run is just running to a previous sensitive level. So if we go back to 5 minute time frame, for those who love buying crashes, one day they will cry, because what's going to happen? They will think maybe the market will buy here, maybe this is support. No, guys, we don't have support levels here. We don't have support level because crash is crash. Once it breaks below, it goes. So now if you check, guys, I had this trade. I wanted us to catch this spike. Unfortunately, I was explaining. So this is crash 500. Then let's go to crash, another crash, and we study how it will react. So let's go to maybe okay, this is crash 300. This is crash 300. This is crash 300. So now let's analyze this one and also catch some spikes. If we check crash 300, it's a daily chart, and then we have a flip zone here, a flip zone here. This is a flip zone. Guys, never ask me what's a flip zone. This is a flip zone. You see here, this is a daily chart. So unfortunately, prices are failing to break above this level. Then they're finding a level of resistance here. And then if we check, we're having another sort of equal highs there. And then equal highs, they're simply giving you a signal that price is no longer serious about going up. And then it will find sort of a liquidity side there. And then now, when let's say we want to sell crash 300, remember how to create a long-term setup. This is what I'm doing. Now we have to wait. Guys, remember, you don't have to create a setup and trade same time. You can wait for it so that you can create a kill setup. So this is what can be our prediction on crash 300. This is a daily chart. So can wait for crash 300 for 3 days. No matter what, we want perfect results. So we wait for those trades or for that setup for some time. And then if you want to scalp, let me show you if you want to create a scalping, maybe you want to create a scalping setup on crashes. Then now we'll go to 5 minutes time frame. We can see that the price is still on a level where there is a sensitive level, something like this. When I talk about sensitive level, let me just insert a zone there. And then if we check, let's just focus on these two previous highs. You see, prices is failing to break below these highs, or we can kindly do this clean setup. We're having equal highs there. If crash 300 was serious about buy and selling, it should have if it was serious about going up, it shouldn't have created this equal highs. So this equal highs, there's a nice signal for you. And the check now is still trading back inside near the previous high. Then now I introduce you to rejection blocks. Rejection blocks is something like this. You take from the previous rejection and then you extend the level. And then from there, now I want to trade. Let's see if we're going to win this trade. I sell, and then where do I set a stop loss? Now I'm using a rejection block. Where do I set my stop loss? I set my stop loss above the rejection block. You see, this is what is going to happen. Then the prices, anytime they can trade off away from this rejection block. So this rejection block, how did I do it? I just took from the previous rejection because I saw that this was a nice equal highs that was formed. And then I place my sell. Then I go back to 5 minutes chart. And then in the 5 minutes chart, what happens? This is what I'm seeing. So now prices can come and retest on this level, activating sort of an order block on the 5 minutes chart. And from there, they trade away. This is the possible move for crash 300 now, a scalp. And from there, we can estimate how many pips can the spike have. Any pips, it's possible. And then switch back again to a daily chart on boom. Let's check booms. Booms, they are slow. They are fucking slow. They are fucking slow. I wanted to show you booms, but they are fucking slow. In the meantime, of holding those trades there. So guys, what I'm showing you, it works on every pair as long as Forex on Deriv. So let's maybe analyze this one so that I can show you how to create a long-term trade or long-term setups. This is a daily chart. This is VIX75. How do we do it? If we study the price, we are having something like this. You can zoom out. We are having something like this, equalize there. This is how we do it, guys. This is how we do it, equalize accurately. You see, this is how we do it. These are equalized. In case I was in there, I should have sent the signal. So this is the equal high in a daily chart. Then what is the current move or current run in the market? The market will sell for some time. And then if you check inside this equal highs, this is a daily chart. If we zoom in, we're having something like this. We're having something like this. This equal highs symbol. We go to 4-hour chart. Then 4-hour chart, 4-hour chart, 4-hour chart. I want to show you something, guys. Simple. You can kill these things. You can kill these things. One time we missed this thing. We missed a lot. So okay, now let's say we want to catch the trend. How to catch a trend in Deriv? Catch a trend, simple. You can use 30 minutes or 15 minutes time frame, but then 30 minutes is the best. Okay. What do? I insert. So we use flip zones. In case you didn't know, we use flip zones. How do I draw a flip zone? This is a flip zone. You see, or we can use what we call meditation block. This is a level where the market price will have to come back and refill an order block, but then this is an opposite order block. Or the reason being, you see this green candle. This is a bearish liquidity void. Then we have a green candle which is alone there. This is a gap. We have to balance the both sides of the market participant. We can't have sellers only. We also have to have buyers. So the market, don't chase it in case you miss a sell. It will come back to refill this gap, and then from there it sells. So guys, please make sure, mostly when you see this candle alone, please make sure pay attention on that. Let me show you what I'm talking about. Even if it's a daily time frame, any time frame, then this is where we wanted our crash. We're still selling. And then let me show you what I'm talking about, guys. I won't show you something that is not working. We've been back testing our strategies for some time, been here in the market for some time. So I want to show you that it was crash. Let's go to 1 hour. I want to show you that medication block that I'm talking about. I saw it somewhere. I was busy here. So yeah, something like this. If you check here, you see this candle, guys. This is a red candle alone here. You see this is a red candle alone. So prices, there is no other way for it to come, not to come back to refill this liquidity. So in case now you are selling here, you are running multiple sell trades and you don't know when to exit. You can come and exit here. This is your TP. This can be your TP. So that you can be able to know that the market has to go and refill this bullish liquidity void by seeing this. It's a migration block. It's a migration block. So then I wanted to show you a nice one, but unfortunately I can't see a nice setup there. I can't see a nice setup. Oh, we have another one here. Seems like this is boom. So sell crashes, buy booms. Always sell crashes, buy booms, so that you can understand how this thing works. You can find it easy for you to succeed in forex. So unfortunately, guys, I'm not seeing any setups here. So this is boom 500 daily chart. If we check boom 500, I specialize in long-term setups. So when we talk about order flow, guys, let me show you what is order flow. You see the market prices were coming in a downtrend. They were coming in a downtrend, long-term downtrend. Yeah? So unfortunately, they're starting to rest and start consolidating. So the moment they start consolidating, it's where you can be able to look for a buy setup in such a way that the big banks or the market movers, they are busy placing many buy trades there. So if you check what I talk about order flow is something like this. Let me show you what's an order flow. Let me show you what's an order flow. Guys, I've shown you these things. If you read my PDFs, so this is a daily chart. Then this is our prediction. Simple like that, guys. You don't have to confuse yourself applying many things. What have I done? Check, zoom out. It's a nice downtrend, and then now prices are starting to consolidate. You see, now prices are starting to do something like this, are starting to consolidate, And from there, a nice order flow or a nice break of structure is something like this. Then it breaks below, and then from there it consolidates against, and then from there it will trade off for a long time. It will clear all these previous highs. This is a nice example of an order flow. If we check, already we have our liquidity injection. We call this our liquidity injection. It broke below our key level or our bank's liquidity level. Then if we can link with my PDF also, then equal lows there, building liquidity, then liquidity injection by breaking below, then come back, retest there, then it break the ranging market structure, and from there it will continue going up. Then if you understand this, it's a nice clear buy setup. If you check here, downtrend, equal highs, and then consolidation without any equal liquidity injection. So there in that setup, we are having liquidity injection. Then from there, it will trade off. Then you can enter in this retest or buy, keep buying here. So since we know that those are spikes, mostly they are likely to keep breaking below the levels and giving many people false hope. Then you'll be surprised when you come back in the chart, you find which you got many spikes there. You see, so mostly you have to know that if it's a long-term setup, as we know that we always buy crashes. We buy booms and sell crashes, so you can be able to keep buying during the liquidity injection. You'll be able, with no doubt. Here it is, a liquidity injection, and liquidity injection. Here it is. You see, so this was just giving a false signal to many traders there. So if you check now, prices, they might not come back to this level. They might just like do something like this, then start trading off, breaking the market structure. So you see, this is how we do it, guys. So if we go back now, let's go and check our trades. We had a sell in crash 500, 300, and also a sell in crash 500 there. So let's go check crash 300. Here it is. We got the spike. You see, we got our spike. So this is how we catch spikes, guys. Nothing more other than that. So you see now, I'm showing you perfect information. So the moment it gives you these spikes in this level, you see it was activating this order block. It's showing that you're gonna have a long down run. So this can be a nice scalp there. And then check, for example, and then let me go to 5 minutes time frame and show you what we talk about risk management. You see this stop loss, check. If I set it here, I'm losing how many? 8 USD. Then where do I set my TP? My TP can be almost somewhere there. Then check how much I gain. I lose 30 USD to gain 112 USD or 120 USD, it depends. But then mostly this, once you confirm this market structure or this setup, it's gonna be a long-term setup. You see, then let's go to back and check our crash 500. Crash 500, it acts as if it's obeying this level. So by the moment, if you're having a big account, how to create a barcode. The moment it goes up, it approaches maybe one of these previous spike or this 15 minutes time frame. What do? We do this, we do this, we do this. Then now we are trading smartly, knowing that many people or many retail traders, they will be high saying this is a support level, crashes by. They don't be surprised you find crash somewhere here. And people will be crying, say, hey, forex is a scam and stuff. You see, so you have to trade smartly like that. You see, so this it's we're still having our our boom that we're analyzing. So in case guys, I forget. So for long-term trades, for those who are having nice, maybe big accounts, they can be having big accounts to do this, because sometimes it might not come back inside this zone or near. Do this. Set stop loss, losing 60 USD to gain how much? This is very important. To gain how much? 500 USD. You see, and it's gonna go for some time. This is a daily chart. You don't have to keep checking your platform, guys. You just place trades there and forget about your platform. Then you know which this is a long-term setup. You understand what I'm talking about? So you don't have to keep pressuring yourself there. You just have to keep holding, trusting your setup. So guys, let's go to crash 500 and show you something. Maybe we might get a spike. You see what I'm talking about, guys? This is how cash spikes. This is how cash spikes. This is how cash spikes. Just that the spike wasn't that much high, maybe big or long. But then people will be buying, guys. You see, what's the risk of buying crashes? People will be saying, "Hi, guys, this is it's a nice support level. Crash will buy, maybe will buy and go for some time. Then they'll be surprised. Crash breaks below the level, breaks." Because anytime you can get more than 2 spikes, you see. So guys, forex is very hard if you are not using a system, because you are going live with your own mind. So you don't have to doubt your analysis. You don't have to doubt your setups. You only have to hold. If you see a long sell, hold that long sell. You don't have to panic, because when you panic, you'll end up closing with 2 USD, and you come back after 3 days. You find your setup in deep profits. You find your trades. You see which the market managed to follow your setup. You see, so you don't have to panic. So let's check maybe big 75 there. I wanted to give you some nice trades before, or a signal before we exit. So unfortunately, big 75, it's coming with high momentum. It's coming with high momentum. It's failing to retrace back from this zone so that we can be able to sell. So guys, we always use flip zones to catch trend. We use flip zones to catch trends. So we can wait for this market to come back here. Even if it takes 2 days, we can wait. But we know that when it comes back here, it will be adjusting the liquidity that it's yet filled. So let's go back and check and supervise our crash run rate. So if we check, this is a barcode. And then if I will shed a signal, I should shed the signal. So if we check, we're still having another spike. So this is showing us, let me remove these 3 levels and delete this red zone. So this is showing us that crash 300 is failing to break above this gray zone. If it was serious about breaking, it should have broken. So if we study the anatomy of the candlesticks, but then I will create a PDF that it's not in this session, trying to show you but again the anatomies of the candlesticks against crash. If you know, guys, candlestick, it has to have an upper shadow, so this candlestick can reject and end up being or maybe closes being in a bearish side or in a red candle. So you don't have to panic there. So we have to hold. So you manage to see how we manage risk. So what I can tell you, another thing, maybe let's say we want a scalp crashes. I can do something like this. Let's go to 15 minutes time frame. I can do something like this. I want to show you risk against crashes on smaller accounts. Let's say maybe I find this level, a level that I can sell. What I can do, if it's a zone, something like this. Maybe let's say it's a zone, something like this. Okay, what can be my prediction? My prediction can be something like this. It will break a little bit above and then trades back down. Then I do this. And then I can place many trades as I can, depending on my account size there. So the thing that I will have to tell you guys, if you are having 100 USD account, you can make 1,000 USD profit in 1 day. Trading crashes. You identify key levels. Then after identifying key levels, you accept a total loss of 10 USD. Only 10 USD. And at the end of the day, if you win that 10 USD, if you reach a loss of 10 USD, you accept it close. Then you know what, if you win the spikes, you will win more than 10 USD. You might go with 100 USD in one trade. So now let's go and check our crash 300 on that zone. Guys, yeah, if I'm lying, just tell me if I'm lying. If I don't know my story, just tell me, guys, via inbox. Right? This guy is he loves talking too much, doesn't know what he's doing. Then if we check now, here's our spike. I told you we will have a spike in this level. You see another spike, just that it's not that much big. If we check now, all trades are in profit. You see how we trade spikes, guys. There is no use for indicators, man. I stop buying indicators, guys. So you see how I've managed to analyze this crash. This is crash 300. Then you can close your trades if you want, but another spike popped up again. So you see how we kill spikes, guys. We kill crashes. Equalize, stop loss there. Now we can lock your profits if you want. So this is how we kill spikes. Then if you check at the end of the day, it's a win. It's a win. It's a win. Then let's go back to crash 500. If I'm lying, we don't have spikes because we have to have a spike. It won't buy. Crash 500 won't buy. Here it is. Here's what I'm talking about, guys. It won't buy. I told you it won't buy. So many people will be trapped. So that's why they say Forex is hard, because they don't know when to sell, when to buy, how to identify moves. So if we check, we place trades there, crash 500. If we check, our trades are in profit. So this is just showing you, like I was showing you how to cash or to trade spikes. So now we know that our long-term outlook, it's a long-term sell in crash 500. Then now we check, many people, they will be busy seeking stop losses here. Those who love buying crashes, and they will be crying that side. You see, so this is not how we trade, guys. That's not how we trade. So if we go back to crash 300, this crash 300, then what do we do if you want a barcode? If you want a barcode, don't ask me a question via inbox. So you do something like this, do something like this, do something like this, and from there, at the end of the day, it's a win in crash. So don't be surprised when you end up seeing many trades, mostly when I trade. That's how we do it. So if we go back to boom 500, this is our long term, guys. This signal is a long term. I can even come and share the signal, so you manage to see how we analyze the damage. This is how we analyze crashes. I was just showing you crashes because these are spikes. So, but then in VIX and 75, if you are willing to trade 75, you can look for an entry, for a long-term entry, and then check what's going to happen. Let me show you something. What I was talking about. This is a mitigation block. Just that our time is running out. This is our mitigation block, guys. You have this in your phone. You have MetaTrader 5 in your phone. You can go there and then check what's going to happen here. Price will react here. There is no other way around. Price is running to react to this mitigation block. It's running to react there. So if you are having a nice account, you can be able to look to buy a VIX 75 on the mitigation block. And then this mitigation block is on from 4-hourly chart. It's from 4-hourly chart here. You see that it will just do something like this, and then at the end of the day, it buys, and then create a run in the previous low, and from there we sell. It's our flip zone, and from there we sell, and from there we roll the trend, we sell. So guys, I managed to show you how we kill spikes. So anyway, guys, let's meet in box. If you have any questions. So for those who would like to join my VIP, they can also still come to my inbox. Those who don't follow me on Instagram, they can kindly go and follow me for more things. And also those who are not in my free Telegram channel, they can go and request. They can come to my inbox and request a link to get my free books, anything related to this session. You can come to my inbox. So guys, I really appreciate your presence in this session. Our session ends here. In case you need a question, you can come to my inbox. Good luck, guys. I'm out.